Good morning, accounting grade 12s. We want to continue with financial statements of a manufacturing business. Our focus is on income statement, also known as abridged income statement or short form income statement. Like any other business, the motive of a manufacturing business is to make profit, and this profit is calculated in the income statement. When we did the production cost statement, we were focusing on the nature of their expenses because they manufacture stock or goods from the raw materials. Their expenses are mostly production costs. So this is the income statement where we calculate our net profit for the manufacturing business. Now let us check the short form income statement. This statement is a combination of a trading account and a profit and loss account, just like any other business. The trading account is main purpose is to calculate gross profit. Our formula is sales minus cost of sales. Our sales are normally given in the question or they are implied. The examiner will see how to present. Then the cost of sales, most of the time is a problem. You need to calculate them from note 6, which is also known as the finished goods stock note or simply the cost of sales note. Sometimes you may be given the sales and a markup percentage. You must use your formulas to calculate the cost of sales. The profit and loss account is used to calculate net profit. We are going to say now gross profit minus other expenses. Our other expenses, as you are going to see why it is called a short form, our expenses are reduced to two notes, which are the selling and distribution and the administration. So we don't list the expenses the way we do in company financial statements. We just transfer the totals and show them in the income statement. So our other expenses are two, selling and distribution and administration. Now the format of the short form income statement is it represented in our textbook page 432. We start with our sales, which we said might be given or otherwise. Then our cost of sales, which we calculate from note 6, I refer to it as B. Our gross profit, it will be A minus B to give us C, the gross profit. Then our other expenses, it is selling and distribution from note 4 plus administration from note 5 to give us F. Now our net profit is calculated by saying our gross profit C minus our other expenses, the total F, to give us G. Now how do we calculate the administration costs from note 5? These costs have to do with the office duties, anything to do with the office. You will notice that the expenses themselves will have a prefix office rent, office insurance, office water and electricity, office stationery. However, there are some expenses which do not need to be apportioned. They are specifically for this department. These expenses include accountant salary, bookkeeper's salary, receptionist salary, even the factory cleaners, even the office cleaners. But whenever we calculate salaries, we must remember our usual formula. It is gross salary or wages plus contributions plus any allowance. Also, an expense which is specific for this department is depreciation of office equipment. That is depreciation of our computers and office furniture. It is charged to this department only. Then other expenses which must be apportioned between or among the three departments It is rent, water, electricity, and insurance. We use our usual criteria, either a percentage, a ratio, or the space. Now, let us check selling and distribution. This is the marketing department and delivery. So any expense which has to do with delivery and which has to do with marketing, it is charged to selling and distribution. Like admin, there are also expenses which are specific for this department. They do not need to be apportioned. Such expenses are sales representative commission, salaries of truck drivers, bad debts, advertising, stock loss due to theft, depreciation of delivery vehicles. So these expenses are specific to the marketing and delivery department. Then other expenses which might be apportioned among the departments is rent, water and electricity, insurance, telephone, you can mention stationery. We apportion them using the usual criteria. Now the finished goods stock, it is a note that we are calculating the cost of sales. We start with our opening stock of finished goods. Most of the time it is given, but you need to check which year is our opening and which year is our closing. If we are given 2018 and 19, your 2018 will be your opening and your 2019 figure will be your closing. So we take our opening stock of finished goods, our A, we add now to the cost of production of finished goods. The cost of production of finished goods is our final amount from the production cost statement. Now, if we add our A and B, will give us the finished goods available for sale in the current year. That amount minus our closing stock of finished goods, D, will give us the cost of finished goods sold, or simply the cost of sales. Now, cost of production of finished goods, like I said, is transferred from the